Welcome back to the Eric Krown crypto channel, wishing you a happy healthy start to this nice Tuesday morning here. It's the first day of the real trading week, as yesterday was a bit of a holiday in the US, and now it is game on yet again as the weekend / holiday sideways action very likely to abate. Anyways, other than that, I wanted to wish you, did I already wish you the best? Hey, wishing you the best, baby, because why the hell not? Why the hell not? Bitcoin went up about 20% last week, and it's all good in the hood. However, there are a few things to be aware of actually on the higher, or I wouldn't say the higher term time frames, but the medium-term timeframes that will very likely produce some volatility in the very near term, this next, let's say, 36 to 48-hour time frame. And other than that, I wanted to follow up on the higher-term time frame ideas as well. What else? Yes, that's it. We do have an open position for a marketer for the app, for the Krown trading app, which is what you're seeing in front of your very face right now. If you are interested in such things, if you have experience in such things, more importantly, as a perfect candidate certainly will, then please send a resume to resume@krowntrading.net, and we'll very likely start to make decisions coming into next week. What else? Yes, and of course, and if you find this content valuable, please remember to like and subscribe and herp your derp. All right, sweet. Let's just jump right into it, starting off with the 12-hour time frame over here. This is the HPDR indicator. And what are we essentially looking at? Well, we're essentially looking at the 90% of historical returns range, high and low, getting the current consolidation. So this is just a very easy way, a very streamlined way, a mathematical way, let's say, of getting the current range. And of course, a closure above the range highs, very likely going to see the next major move to the upside. In this case, very likely moving towards 22.3 to 22.5, and a closure below the range lows, very likely going to see the next major, or relatively major, move to the downside, probably somewhere around 19,900 to low 20,000, as that is where the last CME gapola is. Now, here's the thing. We actually do have a setup here. I want to say at the outset that, personally speaking, one, this setup does have a bit of a lower hit rate compared to a lot of the other ones that we have seen. And two, there are not as many iterations for it, but it is the HPDR indicator getting above even the blue range highs. Then that coupled with declining volatility on the BBWP moving average, which started to happen officially as of midday yesterday, that is when very likely a reversion play does get initiated. And reversion in this case, after a big upside move, very likely going to come down. And so if we go and reference these statistics over here, I've actually gone ahead and backtested them. In case you're wondering, this is kind of what the quant program looks like, or it is what this is literally in the quant program. But yes, this is the 12-hour time frame. These are the conditions right here. And of course, I did make a note on this one. In a bull market, avoid. Now, I did define that as a weekly uptrend, which we're not in just yet, but could it be the start of one? Potentially, yes, of which the stats for the bull market were terrible on this particular setup. But anyways, going through the data, actually did get 50 results on this one. Yeah, it did get 50 results. For some reason, I had in my mind that I got 30, but maybe that was the daily. Anyways, out of 50, 31 were winners with that particular setup, so that gives it about a 62% strike rate. And the average gain in this case, move to the downside was about 7.92%. On the other side, for failures, however, because it's actually just as useful in the event that we do see a failure condition met, which we'll go over right after this. We did see an average move about 9.22%. In this case, that would be to the upside. First, standard deviation measurements. Again, this would be the win side right here. This is the loss side. And then I did a min-max, and we've seen some pretty humongous moves on it and some pretty not humongous moves on it as well. Also took an analysis of the actual days taken. In the case of the winning trades, about just under 7 days, and the losing trades just under 6 days. Anyways, if we play around with these numbers, basically 8% on the win side versus about 9.22% on the loss side, well, where would that essentially put this? So the setup in the way that it was tested officially went off right on over here. What would 8% shaved off current price action look like? 19,380. That number sounds very, 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 very familiar. Why is that? Well, if I put on my drawing tools right here, that's exactly where the 382 Fibonacci retracement is at 19,350. And kind of where traditionally you do expect, or I've been taught to expect, strong trending moves to pull back down to. Anywhere around there, above there is fine as well, but anywhere around there, just not below there on a closing basis. Now, I did say that I'd go over the failure condition, and in this case, it's actually very, very simple. A closure above the current wick highs of this consolidation, which is about 21,500, or let me actually see. Yeah, I'm just going to round up here, 21,500, let's say. At that point, we actually have seen an average move about 9.25% almost. In this case, that would be to the upside. So let's just see where that would put things. And what do you know? That would put Bitcoin at about 23,250. That was a number that was coming up in several of the volatility versus stochastic momentum setups that we've been looking at over the past, over like the past month and a half to 2 months now, but more and more relevant in the past couple weeks here as Bitcoin actually starts to play them out. So again, this is why I kind of look at these things as just as useful in the event of a failure as it is in the event of a success. So it does have a higher probability, albeit I wouldn't say like a super high probability to play out to the downside here. And again, if we are indeed in the start of a bull market, which maybe we are, maybe we're not, I do not have any major, I do think that is a major low and Bitcoin works way up, then we do expect, those results to be much worse, actually, historically speaking. Anyways, now that I've gotten through that, I need to go and reference my notes again because I have lost my place. And let's just go see where we are at. All right, there she is. Come on, baby, phone, work faster. All right, sweet. So here's the thing. While, we can go over that as far as statistics go, I do want to keep an eye on where we are in the grand scheme of things. One of them being that major 5-day setup over here. I won't go through the explanation of it. In fact, there were like a couple of comments yesterday. People were like very mad that I was like going over this again. But hey, look, these setups take like months to play out. So, or like a month to a month and a half to play out. So like, I'm going to go over it again. but anyways, let's just remind ourselves within the grand scheme of things. So again, still up overall on the higher term timeframes is a lot more likely. I'm essentially bullish as long as Bitcoin's above 19,350. Very bearish below 19,350, obviously. But something that I haven't talked about in a long time, and actually one of my only and favorite moving average crosses is the silver cross, which is the 21, the yellow moving average right here, and the green 55 moving average right here as well. And apparently, where is my damn, oh my God, did it delete my charts? Oh no, it didn't. Okay, all right, we're all good, no need to rage right now. But basically, anytime that we've seen this cross happen to the upside, which we've seen many times in the past, I think it's about 30 times over the full history of Bitcoin, they generally have lined up with some pretty impressive moves. Now, you can kind of just read the percentage gains on your own here. I can say that on average, it's produced about 81.87% move, in this case, obviously to the upside. Now, some of these were obviously traps, and you do typically expect this to happen like right on traps as well. So let me give you an example. Where's a good example? There's a good example over here last year in March where it got a nice cross the upside. It even played out a decent move to the upside, about 12.5%, but that's nowhere near compared to, even these over here, which were 40 to 46, and some of the greater ones, which were like 200% plus. Now, I did omit the extreme outliers, which there were 3. There was like a more than 1,700% move. There was a more than almost a 1,200% move, and almost a 23% move as well. So I did omit those as I didn't want to mess around with the data too much, but ultimately, that would give us, another reason to be long-term looking to the upside among many other things as well. So yes, I do still think that long-term Bitcoin has a major low in. I don't think that Bitcoin's going to be making new lows. I don't think that Bitcoin's going to be making new lows anytime soon. If it's going to at all, if it's going to happen, I think it probably happens maybe end of Q2 of this of this year, and probably more like second half. I think is more reasonable. But I'm not even set on that as well. Just if it were to happen, that's kind of where I'd be looking for. All right, sweet. So. You can see the results over here, and I'll just add 81 or basically 82% to the price action from that cross, which happened over here, and that would put Bitcoin in the mid 30s. So hey, if you want a little bit of hopium, that's probably what I'd do. Yes, there's a couple of falling pizzas over here. Not my favorite formation of all time, but the first one actually is looking like it is working out, and it actually did have the right volume signature on it, and the right smell, shape, size, taste, and all that good stuff. And that actually does have an implied target somewhere around about $24,500. So again, not my favorite way of doing things. If you get anything from me, I would certainly not want this to be it, to be very, 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 very abundantly clear. All right. What's also interesting about this is that when we spoke about the potential pullback targets for this setup over here on the HPDR, that was in the mid-19s. Well, what's also in the mid-19s here? The 200 simple moving average on the daily. And also the 9 exponential moving average. And the 21 will start to work its way up there as well, probably within the next... I would say within the next week. 1 week from now probably should be somewhere around there, assuming that things don't completely shut the bed from this exact level. So just another thing to be aware of as of right now. Anyways, so we've gone over that. We've gone over the potential breakout targets from the HPDR ranges right here. We can also go over stochastic momentum, although I would probably trust it less in these particular scenarios because we are at extremes. Let's go over to CME. CME on the daily is still pointed to the upside alongside volatility expansion and will remain with upside pressure as long as Bitcoin's above 20,200. 12-hour time frame is also going to be postured to the upside as long as Bitcoin's above 21 and 28. So again, so far so good. 6-hour time frame is currently down below 21.4, and 4-hour time frame is currently down but will turn up actually above 21,200, which is about $25 above right now in the next hour. So again, do be mindful of the overall gap at about 19.9 to $20,000 even. And hourly, I forgot to go over as well, but hourly will turn up above 21,260. So, I don't trust stochastic oscillators too much in these particular scenarios, but here's something that I can say is that the longer that Bitcoin holds sideways here, the more and more likely it is to try again to the upside and not really give people that secondary chance to buy. Because I do know a lot of the line drawers are really looking for, especially this last little prior high right here, somewhere around mid-18s. I think that's very unlikely. Or I think that if things do come down below 19 or even below 19,350, you're probably going to see a massive bull trap. And I would suggest, I wouldn't suggest because it's not financial advice, but personally speaking, I would not be fucking buying that if not for anything else other than like a very short-term time frame bounce. Cool. I think that is about where I want to be leaving off. I hope that this was in some way helpful, in some way useful. And as always, wishing the best. Forgot to show Bybit. Bybit has their promotion going on. They're offering like $30,000 deposit bonus, but that obviously comes with a lot of, fine print, like you have to deposit a bunch and whatever. But what they do have, what I think is actually very valuable, is 0% on maker fees for derivative contracts with my specific link. To my knowledge, that's the only one that actually has that available because, it's very important to me. And I imagine for more active traders, less fees equals more money in your pocket. Anyways, it's a good place to be leaving it off. Take care, much love, and see you hopefully soon.